We're here with Mike Klayko, the CEO of Brocade Communications. You're in a market, in the data center market, where you're facing a lot of much bigger players that seem to be trying to compete across the spectrum with servers and storage and networking. How do you guys compete?
Well, Peter, that's a great point. That marketplace is dominated by a few people, and then there's a lot of other folks that have really interesting technologies to make up offerings in the data center. We compete with innovation. I mean, that's the best way to go ahead and compete. You need a contrasting position because it's no longer just price and performance that customers are looking for. They're looking to get solutions, say, how do I solve this problem where I'm trying to virtualize my data center or build a cloud infrastructure? And if you have a highly differentiated, contrasting position from a product perspective, they'll give you an invitation. And then when you show them what you can do, you have an opportunity to win. And once you win, many of these wins last for a decade in length.
Mm-hmm. A lot of the analysts have been concerned about Brocade over the last few years, but you guys are in a new product cycle now. Give us a sense of how that's going at this point.
Well, it's actually going well. When you think about the fact that when we start product development, it starts 2 years or 3 years ago. We've just announced a new technology called VDX, or Virtual Cluster Switching is the software that runs on it. We started that almost 3 years ago. That's now being introduced into the market. We're beginning to ship it. The early indications are great. We haven't abandoned our legacy, our heritage, which has been fiber channel. We announced that we're going to be enhancing that to 16 gig technology. Most importantly, when you look at all the different pieces, whether hardware or software and so forth, focus on the customer's data center, which is now everywhere. Mm-hmm. Data center is not just the four walls, but it's everywhere. We brought over 40 products to market this year alone that are all brand new implementations that you'll now start to see us begin rolling out into a broader customer segment in 2011 and beyond.
There's been a lot of M&A activity in the data center space. A lot of people have a lot more cash than you guys do. How significant is that? Are you constrained in terms of your ability to compete on that front?
Yeah, there's a lot of companies that can acquire technologies and grow through acquisition. It's going to be very difficult to acquire Ethernet fabric technology because it's just brand new into the marketplace, and that's a new category that we have a lot of high hopes for. Again, I think it's a foundation for us for more than another decade. It builds on the current technologies we've had in fiber channel, as well as the expanded role of you've seen Ethernet play in a data center, and it solves a lot of issues that customers are facing. So our growth is going to be an organic growth strategy from the technologies that we've developed, and we've got plenty of, I'll call it dry powder, because there's a lot of opportunity for the next, foreseeable future.
Okay. Just one last one. You guys, the forecast you gave for this current quarter was of concern to the street, especially the federal business, I guess, was the big problem. Is that business that you don't think is going to materialize, or are you still, what's the situation with federal spending?
Yeah, a lot of our federal spend, which is a very important market for us, is in the intelligence and the military side. Last year, in this same exact period of time, the appropriations bill that funds projects that have lifespans of 5 to 7 years got delayed, and it moved business. It didn't eliminate business, it moved it to different quarters. As I've said before, the federal government really doesn't care about my quarters, and they sometimes will move it whenever they can go ahead and acquire based on their appropriations bill. We're just taking a more pragmatic approach and cautious approach that these appropriations bills may not get signed. We've got a brand new Senate, we've got a brand new House, there's a lot of new people, and so I think that it could be a little challenging, and so with that, we just de-risk it out and said, the business is there, it just may not fall in our quarter.